All right, guys, so here we are talking about the three common approaches to transfer pricing. And as you can remember, or if you can remember in the last video, we talked about how transfer pricing is basically when one division sells a product or service to another division. And what we're talking about is at what price do they sell it at, right? All right, so one of the approaches is the market price approach. All right, so it's the price at which the product or service can be transferred, or service transfer could be sold to outside buyer. And so in that case, the transfer price is equal to the market price. So if the outside market exists for the product or the service transferred, the current price may be a proper price. All right, so that sounds like a whole bunch of mumbo jumbo, but let's put that into perspective. So assume that materials used by Wilson in product snacking food in the Western Division are currently purchased from an outside supplier at $20 per unit. So I'm a visual person, and when I read that, I'm like, what? Anyways, so you have this, the company is called Wilson, right? I'm not gonna have enough space, but that's okay. Wilson, and Wilson has a Western Division. And so right now, Wilson is probably, Western Division is going out to the outside vendor, and they're buying this product for $20, right? There it is, from the supplier. It says the same materials are produced by the Eastern Division. So here's my West, and here's my Eastern Division, right? And so what they're saying is that Western can probably buy this same material from the Eastern Division, right? It says the Eastern Division is operating at full capacity, that's important, of 50,000 units, and can sell all of its produces to either the Western Division or the outside buyer. So what they saying is they ain't worried about no Western Division. They gonna sell to who they gonna sell and make their money one way or another, right? So it says a transfer price of $20 per unit. The market price has no effect on Eastern Division income or their total company income. So what they're saying is Eastern Division, whether they sell it to Western or whether they sell it to someone else, they still gonna get $20. It don't make no difference to them. So in this case, for Western Division, it doesn't really make a difference for them. They can go to the outside provider or they can go to their inside salesperson. But it just depends on if they have the capacity or whatever to sell it to them. So in either decision, neither company or division is affected by if they buy it inside the company or not, because it's $20 no matter how you slice it. Okay. All right. Let's talk about negotiated price. So a negotiated price, it allows the managers to agree or negotiate amongst themselves on a transfer price. Now, what's important here is that the transfer price must be less than the market price, but greater than the supplying division's variable cost, right? So I'm gonna give you a discount, but it's not gonna cut into the cost of making that item. That's what they're saying. So we'll see this all play out. So it has to be below what you're selling it to the outsiders, but higher than what I make it for. So you gotta basically trying to sell it at a cost or a little bit above that, okay? So let's look at this at play. So it says that, assume that instead of capacity of 50,000 units, the Eastern Division capacity is 70,000 units. Now, before I move on, why is capacity important? All right, so take a second, think about that. Why mention capacity, right? So they're saying, oh, I have a capacity of this and I have a capacity of that. Well, I want to let you know capacity is important because if they don't have the space to produce enough units to even sell it to you, it's a moot point, right? Basically, because they could want to sell to you, but if they don't have the space, the time, the energy to do so, they're not gonna make it. They're not gonna be able to sell it to you, right? So having enough capacity to sell, to make more units is very important to this process. All right, I digress. All right, so they said the transfer price of less than $20 would encourage the manager of Western Division to purchase from the Eastern Division. So let me take you back for a second. So here's the Western Division and here's the East, right? And so they're saying that in order for the Western Division to buy from the Eastern, it has to be less than $20, right? Otherwise, they're just gonna go to the outside supplier, right? And then for the Eastern Division, it says a transfer price above the Eastern Division's variable cost of $10 would encourage the manager of the Eastern Division to supply to the West. So, right? So what they're saying is the Western Division is willing to buy it from the Eastern Division if it's less than 20, and the Eastern Division is willing to sell it to the Western Division if it's greater than $10. So they have to meet somewhere between $10 and $20. Somewhere. This is where they have to meet in the middle. Otherwise, they're not going to be persuaded or encouraged to sell to each other, to do business with each other, because otherwise one will go to outside vendor, or another one would be like, never mind, I'm good, because I ain't gonna sell it for less than $10. Like, that's my at cost price, right? So they have to meet somewhere right in that question mark. So if it's 11, 15, 17, it's a win for both of them. So it says the negotiated price approach only applies with the supplying division. They must have access capacity. And I've already explained why access capacity is important, right? If they don't have the space to supply that additional quantity, then all of this is for naught, right? Right. All right, so I think I have enough space in this slide to go through this example. But what I'm gonna do is I'm gonna take a break. I want you guys to read through this. Try your hardest to read through this and see if you can come up with the answers for this, or take a picture of this right now or what have you. And then on the next video, I'm gonna work through this problem, and then we're gonna finish out this chapter, okay? So take a second, work through this, and we'll get back together in the next video.